Hello traders, the title of the video is Level 2 Elliott Wave Analysis Trading Strategies that Work. Alright, are you a Level 2 Elliott Wave analyst or Elliott Wave trader? Or are you willing to become a Level 2 Elliott Wave trader? That is the question. To be or not to be. Let's get started, alright? So level 1, technical analysis, is about mastering the technical indicators such as the stochastic, MACD, RSI, CCI, moving averages. The level 2 technical analysis consists of using the Elliott Wave principle, the Elliott Wave pattern to forecast the market, the financial market. The level 3 technical analysis consists of using the predictive factor pattern of Mr. Benoit Mandelbrot. For traders who are interested in level 3 technical analysis, you need to subscribe to the Pro Traders YouTube channel. Check out our playlist about predictive fractal pattern trading. You want to also check our website www.theprotrader.com and check out the predictive fractal pattern. Alright? So talking about level 3 technical analysis, one must master by all means the predictive fractal pattern, Fibonacci retracement, Fibonacci extension, Fibonacci patterns, alright, and the pitchfork tool. Alright, let's get started. Level 2, Elliott Wave analysis, trading strategies that work. The financial instrument that we are analyzing today is Goldman Sachs Group Incorporated, EPIC GS, which is an American stock that belongs to the financial services sector. Unless you are new in the financial market, you already know that Goldman Sachs is a major market participant. It's an investment bank, all right? And one can use, very, very important point for traders who want to master the level 2 Elliott Wave analysis, that Goldman Sachs stock, all right, stock chart, one can use that, the pattern, the Elliott Wave pattern of Goldman Sachs stock, one can use that to focus the S&P 500 because it has done an excellent job to determine the turning point of the S&P 500 of the financial market. So the Goldman Sachs stock very often will trend up when the market is trending up or the market is likely to trend up. All right, and the Goldman Sachs stock will exhibit a corrective wave when the market itself is also exhibiting a corrective wave. Goldman Sachs stock is an excellent market indicator that one can use. So we talk about gold, we talk about crude oil, we talk about dollar yen as a market indicator. But according to my own observation, I have also noticed that Goldman Sachs stock can also play a major role as a leading technical indicator. All right, very, very important. All right. So that's why, as an Elliott Wave trader, we must analyze Goldman Sachs stock. Where is it now? Where is it headed? Where are the profit target level? What is the mini cycle, Elliott Wave mini cycle? Is there a bigger cycle being formed for Goldman Sachs stock? With that information, that will help us to determine whether the correction that everybody is talking about the S&P 500, the market itself, and other financial instruments, that correction, is it likely, to take place? And what kind of correction can we expect? When can we expect that correction? We can use Goldman Sachs stock chart to have a bit of idea where the market is likely to head it. Level 2 technical analysis, trading strategy that works. I have already done my work. But before we continue, I would like to remind traders that it is my intention, alright, to keep this video between 20 and 30 minutes length, alright. So it's an essential tutorial for Elliott Wave traders that want to become a fully fledged level 2 Elliott Wave analyst. So far, I've counted wave, first wave, second wave. Those are the red numbers on my chart. Third wave has been extended, all right, into 5-minute wave, and the fourth wave very shallow. I want trader to remember that the fourth wave is very shallow. It will help us to focus the fourth wave of a higher degree, followed by the fifth wave. So from 2003, when the commodity boom, the commodity bullish trend has started in this financial market, Goldman Sachs was at the rendezvous. He was also trending, has done a very good job to alert the market that a trend is likely to begin. There was that surge in trading volume here for Goldman Sachs stock in the year 2002, where you bought that time, more than 200 million share, more than 200 million share has been transacted at the beginning of that trading phase. As I told traders before, if you want to become a level 2 Elliott wave analyst, anytime we count 1, 2, 3, 4, 5 wave, anytime an impulse wave is completed, anytime a motive wave is completed, that motive wave, we count it as 1. So 1, 2, 3, 4, 5, the red one become 1, which is the pink one here. That one wave become the first wave of a higher degree. After that trending phase for Goldman Sachs, we have a correction in the shape of a flat correction. This is a flat correction. So you cannot clearly see on this monthly chart 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. It is a flat correction. All right. So with that first wave, the pink one here, and the second wave, the pink one here, an Elliott wave cycle is completed. At that point in time, in 2009, at the point where the Federal Reserve was exiting their quantitative easing monetary policy. A lot of money that were pumped into the commodity market in 2003 up to this point now goes, but those flow of money start going back into the stock market from 2009 due to the monetary policy by the Federal Reserve. All right? They were exiting, closing the quantitative easing. The correction that we see here for Goldman Sachs, which is a flat correction, took place between 2007 and 2009. Again, Goldman Sachs has done a very Goldman Sachs stock has done a very good job to alert the market that the S&P 500 and more stock will go into correction. So you have done a good job again as a leading indicator, as a market indicator. So at this point in time, after this Elliott wave cycle is completed, so anytime we say that an Elliott wave cycle is completed, we can also say that that cycle can become a mini cycle of a bigger cycle, or that cycle that is completed right here, all right, is forming or may form, that's the correct word, may form a bigger cycle. All right. So as that mini cycle is completed, so we say first wave of a higher degree, second wave of a higher degree. We are now in the third wave of a higher degree. That third wave will end somewhere here in the zone of $310. We will reach that level. We will see. It does not mean that definitely we'll get there. But if we stop where it is now, what we are calling now third wave of a higher degree will become the X wave, and we will be talking about an extension of this corrective phase in the form of flat correction will become what we call the WXY wave, the W forming the flat correction, and the X being a trend that has failed, which means this is supposed to be a trend in this session here. Okay, if it failed, we become the X wave, and we will forecast that Goldman Sachs will go into correction. If that is the case, you as a level 2 Elliott wave trader, you will say that the S&P 500 and many other financial instruments will also go into correction, provided, choosing my word carefully, provided that Goldman Sachs is still assuming its role as a market leader, or better, that Goldman Sachs stock is assuming its role that they have done in the past as a leading indicator, as a market indicator. All right. Okay, so we can use the Elliott wave structure of one financial instrument to focus on other financial instruments. This is what we call parallel financial market forecast, traded at dayprotrader.com. Already know that when I'm talking about horizontal financial market forecast, parallel market forecast. When we parallel market forecast means that we are using one wave structure to focus, okay, the wave structure of another financial instrument. All right. So here we are. So first wave of a higher degree, subdivided into five manner wave, is a trending phase that lasted from 2003 to 2007. Commodity boom, Goldman Sachs done a good job. Corrective phase, financial crisis from 2007 to 2008, change of monetary policy, a new trend for the stock market, and Goldman Sachs was still at a rendezvous. Now we see a new trend that is being formed here. It's not yet finished. We cannot confirm today, 20th of April 2018, that this trend is a trend. Why? Because it must go above the 138.2% Fibonacci extension level of the prior trend. What is the prior trend? The prior trend is the one that we are calling now 1 as the pink one here, that was subdivided into 5 manner waves. So before we will call this the third wave of a higher degree, before we can call this, okay, a trending phase, that supposed to be a trending phase must go a little bit above the level of $300. That's why we are focusing that new trend, that third wave of a higher degree must go above the $300 level, which means in the zone of 310 up to 320, something like that. Very, very important. If it fails to go above that level, we will call this supposed to be a trending phase, this supposed to be a third wave of a higher degree, the S wave, and we will forecast that Goldman Sachs will go into a corrective phase, forming a gigantic WSY wave, W as the flag correction. This is supposed to be a trend that has will become the X, and we will expect another corrective wave, a pattern. The 4 essential pattern, one of them will be formed after that. But if the supposed to be trend continues and break above that level of a 300 level, we will see that, all right, first wave of a higher degree, second wave of a higher degree, and we are now in the third wave of a higher degree. We are now in the third wave of a higher degree. As an Elliott wave trader, if you want to become a level 2 Elliott wave analyst, all right, or if you want to apply the level 2 Elliott wave analysis trading strategies that work, you must always ask the question, where are we now? So where are we in relation to a trend? Where are we in relation to a corrective phase? Where are we in relation to a mini cycle? Where are we in relation to the bigger cycle? This is why this is very, very important for a level 2, okay, Elliott wave analysis. So we can go and start counting wave, for instance, on the 3-minute time frame and hourly time frame, daily chart, monthly chart, yearly chart, and from the 3-minute time frame, hourly time frame, daily chart, we can know where we are in relation to a bigger cycle, or in relation to a mini cycle, in relation to a trend, in relation to a specific corrective phase. So now that I said to you, this was a trending phase followed by a correction. That trending phase, we call it first wave. This corrective wave, we have that flat correction, we are calling second wave of a higher degree. We are now in the third wave. As I told you, it's not finished yet, but if it's completed, where are we now? So looking at this supposed to be the third wave of a higher degree, or this supposed to be the trending phase that is beginning now at the end of the first cycle, at the end of the second wave right here. All right, where are we now? We are now at the end, all right, of the third wave of that new trend. It's very important for level 2 Elliott wave analysis. So anytime you are counting wave, you can tell somebody where you are in relation to everything else that I've said so far. Where we are now at the end, all right, of the third wave of this trending phase that is starting in 2009. First wave of that trending phase, second wave of that trending phase. Pay attention to the orange numbers. We are now in the third wave of that new trend, and that third wave of the new trend is subdivided into 5 manner waves. 1, 2, 3, 4, 5. That's the third wave of that new trend that is starting in 2009. A lot of traders may disagree with me and say, Joe, that the fourth wave here is overlapping the first wave. Sometimes we face those challenges. It's down to you whether you accept it or not. Here, I'm accepting it. Why? The reason why I'm accepting it is because they just retest the top of that first wave right here. Okay, first wave, all right? That's of the third manual wave right here. They just retest it. All right, so I'm working with that. Another reason why I want to work with that is because if you apply Fibonacci extension to the move from here to this first wave of our new trend, you will notice that can we do it now? Hold on, please. If you apply Fibonacci extension, let's do it properly, okay? I'm under a time pressure to please trade that one video to be very, very short. All right. Apply Fibonacci extension to that first wave of the new trend from the top to the lowest point. You will see that the 161.8% Fibonacci extension level of that first wave of the new trend is this line here. You see here 161.8%. That's where we are now. That's why I'm happy to call this the end of the third wave of that new trend that has started in 2009. So we can say that it's a normal third wave for this new trend because it did not go above the 161.8% Fibonacci extension level of that, okay? The first wave of the new trend that has started in 2009. And that new trend that has started in 2009 is forming, it's not completed here, is forming, all right, the third wave of a higher degree. Attention to the pink third here. So first pink, second wave of a higher degree, third wave of a higher degree, expected to go at least above that 138.2% Fibonacci extension level of the prior trend, above the 300 level, 310, 320 level, and then after that. So as I explained to you, the reference points are very important for somebody who wants to become a smarter level 2 Elliott wave analyst or Elliott wave trader. The reference point 2003, commodity boom has started, commodity bullish trend has started. Goldman Sachs did a very good job, was also trending. Financial crisis 2008, Goldman Sachs was also correcting. A new stock market, the S&P 500 has started a new trend in 2009. Dow Jones, all right. All the blue chip stock has started a new trend. 2009, Goldman Sachs was there, and that new trend is the third wave of a higher degree for Goldman Sachs. Where are we now? So we are using the reference for 2009, 2007, 2008, 2003. All right, you see now? Now with that information, where are we now? We are now at the end of the third wave of the new trend, not the higher degree. Not the higher degree. The third wave of a higher degree, we end above the $300 level. But the third wave of a new trend, orange 1, orange 2, orange 3. We are now at the end of the third wave of the new trend that has started in 2009. So we can forecast now that Goldman Sachs, as you see here, is forming a shallow fourth wave. We will see. See here, this section here, that's why I put another 4 here. That's the orange one for the new trend that has started in 2009, followed by the fifth wave of the new trend that will go above the 300 level compulsory. If it doesn't, we'll call all this X wave, expecting a corrective wave. All right, so you see now, so with the assumption, with the observation that we have made that Goldman Sachs stock stock chart has done an excellent job as a market indicator, we can focus, my friend, that the correction that everybody is talking about in the stock market, all right, that the S&P 500 do for correction, all right, let me bring it on, all right, that, the market must crash, blah, 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 all right. We need to be very, very, this is the S&P 500. Can you see any correction here? The trend is still in place. Am I missing any data here? That's double checking. Okay? Right? So this is in 2018. This is the correction people are talking about now. Right? But if we are using as a level 2 area wave analysis, Goldman Sachs as a market indicator, we will say that it's a bit premature or it's a bit too early with what we have seen in the past, that this correction that everybody is talking about for S&P 500 may not happen now. All right? That correction may start at the end of the new trend here, this new trend that has started in 2009. But also we can tell people that that correction that everybody is shouting about and talking about, all right, may be a shallow correction because it will form, during that time, Goldman Sachs will be forming the fourth wave of a higher degree. And generally speaking, the fourth wave of a higher degree is the fourth wave is a shallow wave, and also using the structure of this fourth wave, as I told you, remember that, to remember this fourth wave of these trending files, all right, to forecast that fourth wave of a higher degree. We always say that looking at the structure of this first wave of a higher degree, the fourth wave, the fourth minor wave of the first wave of a higher degree, the fourth wave of Goldman Sachs of a higher degree will be also a shallow. Those are expectations. The price may count them all, but there is a warning because I'm talking about S&P 500. Remember that I said that if Goldman Sachs, for one reason, couldn't go above the 300 level, I'm repeating this one because it's so important, couldn't go above the 300 level and start coming down, there, in that case, the correction that everybody is expecting may take place at the time when the Goldman Sachs is also forming, okay, the Y wave of the WSY wave. I said it now, and I'm not going to say it anymore. All right, you can only repair the video. Okay, you can move it back and listen to it 100 times. Okay, this is it. So excellent, powerful tool. So as a level 2 area wave analyst, somebody who wants to master the level 2 area wave analysis trading strategy that works, the question that one must constantly ask is, where are we now? What are the reference points? All right, we can also use market indicators area wave pattern to forecast the markets. So we are using the area wave principle to forecast Goldman Sachs. You are trading first the S&P 500. As a level 2 area wave trader, you will always, not sometimes, but always adhere to the trading triangle, which means, I talk about it, if you don't know about trading triangle, it's not trading triangle pattern. I'm not talking about the triangle pattern, descending triangle. I'm talking about, okay, trading triangle. The market first, we are trading first the market, the sector, before the individual financial instrument. So if you are trading Goldman Sachs, you analyze first the S&P 500, you check the sector, the financial services sector, okay, before you analyze Goldman Sachs. And then you will check the market leaders of that sector, and you will check the economy news and the fundamentals at Google Finance or Yahoo Finance relating to Goldman Sachs. Very important, and you align that with your area wave analysis, because we recorded a video at the beginning of this year, how to become a smarter area wave trader, meaning that we don't want to rely only on technical analysis, we want to combine them with market sentiment, market environment, and the fundamental analysis, so we are not jumping ahead of everybody. So where are we now? We are at the end of the third wave of the new trend. We are expecting a fourth wave of the new trend and a fifth wave of the new trend. And we will expect at the end of the new trend, right here, above the $300 level, if it happens, it may not, it can happen, it may not. If it happens, we'll expect the fourth wave of a higher degree for Goldman Sachs. And if that is happening, we'll expect it to be shallow because of what has happened here in this fourth minor wave here. And if Goldman Sachs is forming the fourth wave of a higher degree, there is a high chance that the S&P 500 also will pull back a bit. But don't bank on it that, oh, there's a big correction like this one here. Okay? When the fourth wave of a higher degree for Goldman Sachs is completed, and the fifth wave also is completed, bringing the price into the zone of 320, maybe 200. So what you can do, okay, I will leave that one for now, okay? How you forecast the end of the fifth wave. Check out that video at 24elliottwaves.com. There are many ways we can forecast the end of the fifth wave using Pitchfork 2 and so on, channel, market geometry. Check it out, how to forecast the fifth wave. There is a video, okay? YouTube search it. Well, please don't ask me in the comment section. Just YouTube search it. You should find it. Search for how to forecast the fifth wave, okay? Using the Elliott wave principle by 24 Elliott waves YouTube channel. Okay, so reality. So when that new trend is completed, all right here we'll have the fourth wave of a higher degree and the fifth wave of a higher degree. When the fifth wave of a higher degree, the big one, 2, 3, 4, 5 is in uncharted territory somewhere up there. That's why I didn't put it there. If the fifth wave of a higher degree is completed for Goldman Sachs, we will expect a correction. In that case, we'll use the second wave of a higher degree here, which is a flat correction, to focus the correction that will take place at the end of the higher degree, a fifth wave. So we can forecast today that when that higher degree trending phase is completed, the correction has a high chance to be a flat correction as it was in this second wave of a higher degree, and it's likely to be a sharp correction. You see here, we may say, okay, it's likely to be it's likely to be a flat correction. That's the first forecast. And also the C part of that flat correction is likely to be a sharp move down. So this is the C part of the flat correction here. It's likely to be sharp down, up a bit, down. So you can see that corrective wave has almost, you see here, so some traders may say, John, there is an Elliott wave violation, but no, it's not. You see, it got a tail. I accept this as a second wave. So traders say, come all the way to the beginning. Not exactly. There was some, it's a bit messy. Okay, it's true, it's a bit messy. I don't want to discount it. You can see here, all this tail coming to the first wave. Almost cancel it. Tail. I work with this, I accept it, all right? Because it's all adding up nicely, but it almost cancels it. This one I say to you, there is a group of traders out there that are not using our wave count guideline. For them, as long as the second wave did not go below the first wave, they accept it as a valid second wave. But following our guidelines at 24 Elliott wave, we put a question mark on any second wave that almost cancel the first wave. And this is one example here. So there is a question mark on this. So that question mark will be confirmed if that support to be a new trend fell right here. All right? But we are working with it right now. All right? Are you seeing now? All right? So because of this corrective fail, we can forecast that at the end of the multi-wave of a higher degree, the correction may take the shape. Can be a zigzag, can be WXY wave, can be something else. Right? May take the shape of a flat correction, and the C part of the flat correction is likely to be a sharp move down as it was here, almost cancelling the whole trend. Is that possible? I doubt it. But that's the only thing that we can say at this junction. The price may bring something else out. The forecast is just an expectation. There is a trend line here. See this trend line here? I'll just draw it roughly here. That trend line will help us to have a bit of a deal as a support level. As that correction, you can extend it. Which color should I use now? Green. Yes, dark green will be good. That correction may stop on the edge of that trend line or may go a little bit below it before coming back. We will see, but it's going to be very, very interesting correction when the Goldman Sachs is completing its fifth wave of a higher degree. And if it's starting a correction, well, the S&P 500 will also, if that is the case, may follow Goldman Sachs as it has been doing for many years. All in all right, my friend, this is the level 2, okay, Elliott wave analysis, trading strategies that work. You want to combine the lower degree will come with the higher degree will come. You want to combine the mini cycle with a bigger cycle. You want to connect the dots. Where are we now? Where are we headed? In relation to a trend, in relation to a corrective phase, in relation to an Elliott wave cycle. Is a mini cycle forming what are the scenarios that can happen. If it fails, we may have WSY wave. See from different angles, be prepared, and flow with the price. As you can see here, I also use Pitchfork tool. See here, in this section here, that will determine the possible path that the fourth, wave of a higher degree and the fifth wave of a higher degree will take. Excellent, powerful tool. It's right there to help us. So we are now on the end of the third wave of that new trend. Fourth wave of that new trend likely to be shallow, we will see, followed by the fifth wave of that new trend, and the fourth wave of a higher degree, followed by the fifth wave of a higher degree. The Pitchfork tool will help us, to map out Goldman Sachs until, we reach, the end of the fifth wave of a higher degree. And we'll use this second wave of a higher degree, the pattern, the structure, the political factor of this second wave of a higher degree to forecast the corrective phase at the end of the multi-wave of a higher degree. All right? So we talk about the top-down trading method, all right? So level 2 technical trader must combine the wave pattern with, the top-down trading method. If you don't know what is a top-down trading method, YouTube search Mastering Top-Down Trading Method by 24 Stock Trader YouTube channel. There are 5 videos out there, playlist, to help you master, top-down trading method. So you are looking for a trading setup. You are using the Elliott wave pattern in conjunction with the top-down trading method, so you may time the market more accurately. So you are forecasting the market, and when the market is doing what you are expecting, you will now pull out the tools of different time frame trading method to time the market accurately without assuming anything. Talking about becoming a smarter Elliott wave trader or a smarter level 2 Elliott wave trader. All right, one will always check the fundamentals. You perform Google ASIC test for Goldman Sachs. You check the economy news. Where is the market? What is the current market environment? Everybody's saying that S&P 500 due for a pullback. Goldman Sachs has been an excellent market indicator. Talking about parallel market forecast, we can use the structure of Goldman Sachs stock to have a bit of idea what is likely to happen for the S&P 500, the Dow Jones Index, the NASDAQ 100 Index, and the financial market in general. So, in my view, in my humble view, personally speaking, the correction that everybody is calling for, I think, is a bit too early. All right, we will wait and see. But anything is possible. If Goldman Sachs form X wave instead of a trending phase, then that correction that everybody is shouting about maybe at the rendezvous. Will you be there? All right. So this will conclude our discussion today about level 2 Elliott wave analysis, trading strategies that way. There is a level 1 technical analysis using normal technical indicators. Level 2 technical analysis is about using the Elliott wave principle like a pro, combining higher degree and lower degree, combining minus lower cycle, mini cycle with a bigger cycle, combining a higher degree impulse wave with a higher degree impulse wave, knowing where you are, understanding the reference point, using market indicators, applying the parallel, also using the parallel financial market forecast. All in all, one will always adhere to the trading triangle. the trading triangle, and the top-down trading method. Those are the last two that we will pull out after you have completed a valid Elliott wave analysis to make excellent decision without cutting corners. So they say, don't use that word, don't use that phrase, cutting corner. What do you mean by that? Cutting corners means without skipping any step. If you have any question or suggestion, this is your time, all right? We love the comments. I love them. I read them, all right? Put them in the comment section. And in due course, I will be recording another video to answer your specific question. As you can see, recently, I recorded a video to answer a specific question that a trader has asked about how to use the technical indicator to forecast, to have a bit of idea about corrective waves. So put the comment or the suggestion below, and we really appreciate them. Okay, so this video has been truly useful to you. Say, George, this has opened my eyes. All right, give us the thumbs up. Don't forget. So you need to log in, all right, before you can give us the thumbs up. Sometimes people forget. If you forget, come back and give us the thumbs up, please. Okay. If you think that, George, I'm not impressed, these are not blah blah blah, mark it down. Okay. Anytime we see mark down, we want to find out, go into the mind of a trader. Is he a trader that always mark our video down? Is he the only person marking it down when we have everybody saying thumbs up? All right. Is he a competitor? All right. Okay. Why the trader hate it? Was I speaking like a frog? All right. Was I tired? Is the sound too bad? All right. Why the market? If the sound is too bad, just let us know in the comment section. Okay, please. All right. Was I speaking too slowly or too fast? Just let us know. Don't mark it down. That case, just write it down, George. You were speaking too fast or something like that. All right. Okay. But if you think that this video is an essential tutorial that can help other Elliott wave traders, put us on the map, meaning that share with your friend on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, or you are watching this video without logging in, log into your YouTube account, subscribe please to our channel, and make sure you click on the notification icon, so anytime I record a new video, you will be notified, so you will be the first person to watch it. I would like to thank traders that have been supporting us for years, putting excellent comments, all right, on this channel. Thank you very much for your support. This is very important for us, and we really appreciate it, all right. Sometimes you may think, John, you have recorded long form video. There will be long form video and also short form video because of what you two want us to do. Okay, the retention of the audience is very important, all right. All right. So this will conclude our discussion today about level 2 Elliott wave analysis trading strategy that work. Did it work for you? All right, let us know. Happy trading to you all, and speak to you soon. We are the TSTW 24 traders talking about level 2 Elliott wave analysis trading strategies that work. Did I keep it below 30? No. George, you lied to us. You said 20 to 30 minutes. Now it's 38 minutes. Oh, my apology to you. Sometimes this didn't happen. All right, next time. All right. Don't unsubscribe today, please. All right.